the initial sweep of this daily 5 SMA here, look at the hammer candle reclaim, right? We're getting a nice pop here, guys, through the highs. Nice pop here through the highs. But the short that I took here was once we kind of came down, right? Like off the open, we failed to get back over and hold the 5 minute 20 SMA. It got rejected on the 15 minute chart, the 20 SMA. The short that I took was actually this bounce right back into supply. So this tailing wick here into the 20 SMA. I fired a long position or a short position here, right? As close as I can get to 382, which my entry price was about 379. But with that, my idea was any closure over the 20 SMA on a 5 minute or any break over this 300 spot, just get out, right? Just get out of this trade. And luckily was able to be in this move a little bit early with intentions that, this kind of streamlines down towards this daily 5, right? That daily 5 is what I was looking at. But the sweep, this reversal here was a sweep of the daily 5 SMA and then an automatic reclaim. So about 9:40 in the morning, right? Eastern, 9:40 in the morning, we get back over and engulf that hammer candle. This was a good spot here to say something like, well, what I can do is I can tell myself that I've got support here at this daily 5 as well as this low wick. Now, this is a pretty big range of a stop loss here. This candle was 44 points. But I mean, again, you could have even given yourself a little bit of a tighter risk by saying, okay, if we lose the daily 5 again after this reclaim and it closes below the daily 5 anywhere in this zone, I can just get out of the trade for a little bit less, maybe 20, 25 points. But other than that, I mean, this was a beautiful reversal. And that's why I kind of say, having those daily moving averages on your chart can be extremely beneficial. The same thing here. Look at the reclaim over the daily 10, right? So we had a big explosion here at the top of the hour at 10 a.m. Big explosion over, right? A lot of us were, kind of thinking, well, don't really feel too comfortable taking the 30-minute orb because we're running right into supply. However, if you think about it, running into supply is not necessarily a bad thing. Like maybe if the 30-minute opening range was going to confirm like right in here, right? Where you have like a little bit of a gap where maybe it can kind of test and then come back. But if the 30-minute opening range right here is confirming long and it's busting through supply with a higher time frame bullish bias, then automatically the next trade that I took long here was okay. And I think I posted it in my channel here, but this 5-minute candle high created a new pivot at around 342. If that gets confirmed, let's just take that for a little bit of a ride. And again, I'm in full scalp mode, so anything between 10, 15 points is going to be sufficient for me on the size that I'm trading today. But this is a nice trade here, right? And then we went into some consolidation, set the initial balance high, swept it, kind of pulled back, held, and then now we're starting to like grind higher here. So ultimately, pretty good setups as far as clean price action, depending on what you were looking for, right? Now, if you don't have a plan, of course, then it's a lot harder to kind of decipher, what the hell's the market trying to do here? I see that it's shooting up, but I don't want to jump in. Well, if you're not knowing what to jump into, that's what makes it hard. If you're not trusting that the move's going to follow through, it's because you didn't have that plan for that potential outcome. Remember, I'm always trying to play out both sides of the trade. So even this morning, I'm saying, okay, guys, if we sweep initial balance high and we give ourselves some type of doji or inverse hammer, there might be an opportunity to scalp short, right? That's opening up my mind for the potential, the possibility that there might be a short if this wants to pull back, right? It's not to say that I'm going to lean into that bias and I'm only going to stick to that bias. I just want to open my mind up to accepting the fact that that might happen. Now, it did happen a little bit here and it kind of came down a little bit, but again, depending on, where you were going to pick your entry, was it going to be below one of these candles? Was it going to be closer to the high of day? Was it going to be the breakdown of the range? It was going to be dependent on it. Maybe if you did catch a little bit of a scalp there, maybe you just stayed off of it, or maybe you even took a loss on it, right? So again, but it was an idea. The next idea was, if we get over that sweep of the initial balance highs, then it would be a long position, which You know, you can see here 745, we actually went through this price again, and if you look at this 730 candle, we actually swept it here, right? So we actually swept it here and kind of pulled back a little bit, and then kind of did this double sweep, and now it finally started to break through. So what you really want to see here is like 380s, right? I would say like between 375 and 380s hold. If that doesn't hold, you know, your support's going to be sitting down here at 367, and then obviously 310 would be your next real support that you have there, 315, 310. So those would be some things to look at. But again, I think that as a trader as a whole, you're going to have so much more success if you just kind of stick with the bias a little bit. And let's say, for example, the bias right now is long until proven otherwise, right? Until proven otherwise. So as long as the bias is still long, it doesn't mean that you have to fire a long position at any particular spot. If you're not finding a good area to go long, it just means that you need a better price, right? So maybe your better price is down here at 360s. Maybe your better price is a sweep of 340s in some type of hammer candle, right? Maybe your better price is when we pull back a little bit, maybe consolidate at this 20 and then take out the high of day again, right? Like that's what you're looking for. You want to keep leaning into that long bias until the higher time frame bias changes. And as you can see here, a lot of this consolidation that we had, you know, about 30 to 45 minutes off the open, 30 minutes to an hour off the open, actually consolidated at this pre-market high here, right? Like, so if you look at the pre-market high, you know, the overnight highs, right? London highs, whatever you want to call it. A lot of this price action that we've pulled back to, this little pullback here is sitting right in this range, right? So if I was to drop, just throw a price level line here on the higher time frame, previous resistance from London session, look at what we pulled back to. So we actually broke that London session high, we pulled back perfectly, and then we had a little bit of a bounce. So if your bias was long-sided due to the higher time frame, what do you think you should have been doing on this pullback? Not looking to short, right? Again, there's an asterisk there, unless you're an experienced scalper who was going to take this for a little bit of a 5-10 point ride, right? Like kind of get in here using high of day as a stop, kind of ride that back into this support. But again, I would just recommend a little bit more experienced scalpers who have a better feel for scalping. But what you should be looking for was that break and retest of that London session high. I mean, this doesn't get any more perfect. I mean, literally, I mean, I'm just taking, you know, look at the left-hand side of my chart here. I'm just taking the consolidation highs from London session. I'm just throwing a line there, right? So as long as I throw this line right here, and I tell myself, right, you don't have to be super technical with your terminology. Just tell yourself, where the hell did this market stop at during London? What were some of the highs? What were some of the swing points, right? What were some of the consolidation areas? Let me just throw a zone here. And if we do get over that price in the London session and we manage to pull back to it and it holds, why wouldn't I want to get long again off the 350s? Why wouldn't I want to get long again off the 360s? You know, like, why wouldn't you want to do that? And if your mind goes to, well, we're kind of already up a little bit, you know, I feel like I'm chasing still. In that particular scenario, what you're trying to do is predict where the market's going, and you're not actually following what the price is doing. Again, remember, you're not going to win every trade. You're not going to win every idea. But if you don't have these kind of technical analysis skills to where you're going to actually trust technical analysis, then you're kind of just doing yourself a disservice, right? What's the point in learning price action? What's the point in learning technical patterns or using technical indicators if you're not going to trust them, right? So as a trader, you've got to kind of really get behind some ideas, some patterns, a strategy that you trust. Like if you don't trust that type of setup, then that's fine. You don't have to take that type of setup, but you need to get comfortable with the setup that you do trust. So that way, when it does present itself in the markets, you can take it with no hesitation, right? Like for example, the sweep of the daily 5 in the reclaim, like that's a scalp that you can take, right? Plenty of space into the 5-minute 20 SMA supply, plenty of space into the daily 10, right? The same thing with the 30-minute opening range break. There was a couple of us, even myself, you know, I don't really like taking trades into supply, But again, if that candle that is running into supply reclaims that supply, which we did on that 30-minute opening range, we not only reclaimed it, that's why I was kind of joking with B-Twins. Basically, you know, when you think the market's not going to do something, the market will show you I can do this and more, right? So when it breaks through that supply and now it's put in a new high, well, all you have to really do is your higher time frame is giving you a long bias. Your shorter time frame is confirming the long bias. We need to get in on that confirmation, right? Which the confirmation to get long here was over those 340s. And again, you know, what's your stop loss? Well, I mean, you can trail your stop loss. This would be kind of a big stop loss, a 50 point, if you were going to use the previous candle low as a stop. You could have tightened that up a little bit by giving yourself a stop loss any closure back below the daily 10. You know, you could use a trailing, you know, 20 SMA. You can use a trailing 10 SMA. You can use a 9 EMA. You can use all sorts of different things to kind of mitigate the risk. You know, that's really on the trader's discretion and preference based on your risk tolerance, right? If you're a very quick, fast action scalper, then sure, maybe you're not going to give yourself 30, 40 points of risk, right? If you're trading, you know, a mini contract, of course, right? So you're going to have to find a smaller time frame, maybe a 1 minute previous candle or a 2 minute previous candle low to use as a stop loss in that particular situation. But if you're trading a little bit lighter size, then, you know, maybe you're trading 2 or 3 micros. Well, what's the problem with risking 30, 40 points on that, right? What's the problem in risking $100, $150 a trade to potentially make $100, $150 a trade, right? That's an easy one-to-one there. But again, you got it. It all starts with trusting the price action and trusting your skills to read the price action. And the only way you really develop those skills is by, you know, 1, for back testing, 2, actually marking out these levels in real time, because a lot of things, when you go back at the end of the day, it's very easy to say, I should have done this in hindsight. Again, we all do it. That's what backtesting does. But that backtesting builds the confidence for the live markets, right? And again, I've been making YouTube videos for 5 years now, and I love the people who say it's very easy to point at the chart after the fact and say you should have done this and that. But my rebuttal to that is, if you don't back test and go back on the chart and look at some of the setups that presented themselves and look at some of the price action and the trades that you did take and some that you didn't take, if you don't do that, how are you going to prepare yourself for the next time the market does that, right? So it's like that question, that answer is kind of like, it's contradictive of itself, because of course everything's going to look perfect in hindsight, but if you're not actually seeing what it looks like when it's already played out, the odds of you trusting that setup in real time are slim to none if you've never seen it. And that was one of the best ways that I got comfortable taking trades, was literally backtesting for hours and hours and hours on end. I mean, thousands of days, thousands of setups, because you want to get yourself so familiar with it to where it's pattern recognition in your brain. So when it is happening in real time, you're like, I remember when I seen this do that, right? So this is where I can put my stop. This is where I can try to target. Let's go ahead with this trade idea, right? So again, you know, to each his own here. But what I'm saying is that, what I'm saying that is probably going to help traders more than not is just to use a higher time frame bias, and on the chart, the smaller time frame that you're actually scalping, okay, like your entry chart. So I call it the entry chart. So for me, it's the 5 minute, which I'm really comfortable with. I do use the 1 minute from time to time, which you guys know, but the 5 minute is my sweet spot. It's what I've traded options with and stocks with for years now. So the 5 minutes kind of, it's recognizable to me. But whatever smaller time frame you're looking to pick your entry, you want to make sure that that's lining up with your higher time frame bias. Now, let me give you a situation. This sweep here at 635 right off the open is going against your higher time frame bias. Okay, 100% going against your higher time frame bias. So there's 2 things that you can do here. You can just let the move go, right? There's nothing wrong with that. You can let it go until you get both of those to match, which is what I did personally this morning. But I would be a fool to tell you that sometimes I haven't said, okay, yeah, even though I'm going against my higher time frame bias here, I think that I can take a small enough scalp, not expecting that it's going to do this, just get in and take a small scalp, 10 points, 12 points, 5 points even. I think that I can get this little bit of scalp before we run into any resistance. You could definitely do that. You just have to be aware at the time when you're taking that trade that, hey, I am going against the bias here. If I lose, I should not be upset with myself. I didn't do anything wrong. I understood that there was a little bit more risk on this potential trade, right? So, but there will be times where, let's say on your smaller time frame, you're getting a beautiful entry and it's going against your higher time frame bias. In those situations, sometimes you're probably just going to have to let price action develop a little bit, right? You're going to have to see some more structure. Just let some things go, right? You don't have to be involved in every single tick. You don't have to be, there's like, we trade in here a handful of different ways. But even outside of the particular ways that I'm trading, I'm sure there's hundreds of more setups that other traders out there in the stratosphere are trading that I'm not even realizing because they're on different time frames, that they're completely different strategies. And that's fine, right? Because you're not going to catch every trade. And the video that I made yesterday, where I forgot where I posted it, if I find it, I'll re-tag it again. But the main point in that video was, even though you're a scalper, doesn't mean that you're sitting here trying to scalp a million different trades a day. It doesn't mean that you're going to make fast money all day long just because you're getting in and out. My definition of a really, really good scalper is being as patient, as calm, as silent as possible until that picture perfect setup that you have back tested, that you are familiar with, that presents itself around the level that you're comfortable with, around a pattern or a specific candlestick that you're comfortable with, presents itself. And when it does, that's when you strike. That's when you shoot your shot. And win, lose, or draw, be okay with only taking one or two of those trades a day. If you can operate like that for 30 days, and this is probably going to be the hardest thing that many of you guys will ever be faced to do, is if I said you guys could only take 2 trades a day, how well would you be able to handle that, right? But realistically, you know, back when I was learning how to trade, my mentor told me, because I would ask him, I said, there's a lot of setups that are presenting themselves each and every single day, all hours of the day. How come you only take like 1 or 2 shots? And it's like, if I want to, and this is the answer that was given to me, if I want to put on more risk in terms of what you're trying to say by taking more trades, why don't I just put on more risk, meaning size, number of contracts, number of shares, number of options contracts? Why don't I just put on more size, which is going to give me more risk, on that 1 or 2 setups that I really know and love? And that really made a lot of sense to me, right? Because I still approach my stock trading the same way. I'm not sitting there hammering out a dozen trades like I can do here in the futures market. I'm really kind of looking at a daily chart, 1 hour chart, and then trying to pick the best spot, and hey, it works, it doesn't, it doesn't. And the same thing for futures. Even though you're scalping, even though you're playing these prop firms, you don't have to take multiple trades a day to pass these evaluations to get paid out. You can take 2 or 3 trades a day, even on smaller size, and make really, really good money if it's the right spot and the right trade. And you're never going to know if it's the right spot or the right trade. However, if you stick to the same thing consistently day in and day out, you're going to see that progression ladder continue to push in your favor, because you're doing the same things each and every single day. And a lot of times traders will win a few trades, they'll win a few days, they'll have a really good week, and it takes one day, everything's blown out, right? Everything goes off the wire. And that's because you're just focused on the outcome of the day to day. You're not really focused on the outcome of the next 30 days, 60 days, 90 days. Remember, guys, if you only had one account left to trade, that's it. How would you treat that account, right? And I don't say that to tell you guys just trade super small, guys, and take a bunch of different trades a day. No, like if you want to still back your trade with size, 5 micros, 1 mini, that's fine. But put it behind a trade that's going to make sense with a pair that with a higher time frame bias, and then shoot your shot, win, lose, or draw. And you're going to do and fare much better than going back and forth. Okay, price is back down to this level, I got to bounce it. Price just lost this level, let me go back long. Price just lost this level, let me go short. Like, don't do that. You're putting yourself in an absolute blender. Look for the best potential scalping opportunity, make your money, and go about your business. So that's the monologue of the day here. And now let's get back into the price action. Again, higher time frame bias on the 15-minute chart is still bullish. We've got that overnight high here sitting at 21,350. That's still acting as support or flagging up here a little bit to the upside. Again, I could see someone sitting long in this position. I could definitely also see someone who's an aggressive shorter, and they have taken a short position here and they're using a high of day as a stop. I can see that idea as well. Again, your exit on that would be any closure over 400. Just keep that in mind. You would be going against the higher time frame bias and the short time frame bias here, but I can see that idea playing for a back test. But again, that's for a little bit more of an aggressive style trader. I forgot. And on the in this, where is it at? I forgot what I was gonna say. But anyways, what did AJ say? It's very hard to account for news, data, Trump earnings, backtesting results. I've gotten screwed relying on backtesting only. Forward testing is key. You know, it is what it is. I mean, there's always news and headlines. So, you know, I like, again, I'm not a news trader. I've never been a news trader. I don't really worry about the headlines, this, that, and the other, because realistically, whether you get smoked for 20 points out of a position because there's a news headline or Trump is speaking or some sort of tweet, guess what? More than likely, it's going to be breaking your technical area of a stop loss anyway. So what's the real difference, right? Other than the fact that it's happening in a blink of an eye versus maybe you're sitting in that trade for 20 minutes. So, you know, I don't really pay attention to a lot of that stuff. So the only couple things that I would be doing right now is, one, looking for better price on an entry long here, maybe another pullback, maybe a confirmation of the highs over 400 for a quick scalp. This is how I treat my positions as well. If I'm playing a breakout or a new high of day or a new low of day, I'm thinking scalp. So I want to be a little bit, you know, finger closer to the trigger to get out of that position. I just want to get green and get out. I will hold my positions a little bit longer if I'm getting a better price. So let's say I'm buying a long position off of a bounce that's put in a doji candle, and now we're starting to confirm that doji candle off of an area of support. I will let that trade dance around a little bit because I know I'm kind of buying it in the middle of a range. Anytime, like for example, if I was to go long here over 400, I would get in, get green, and get out, right? So that's what I would be thinking. Yeah, so, you know, like, so for example, on this type of setup here, someone who's taking a high of day breakout here, again, that first push, you guys have to start learning the first push through an area of resistance or a new high of day or something like that will always kind of break and pull back. It'll always do it. So if you are an aggressive trader where you're kind of taking these first attempts where they're breaking through, putting in a new pivot high, you know, your stop loss, you have to kind of analyze what's the previous 5-minute candle do. You know, it's 14.5 point range. Below that, can I make a case for, you know, not giving up too much more if I use a 20 SMA as a stop, right? Or some other moving average or EMA or whatever, then that's what you have to do, right? 400 down to at least 380s, right? So this is at least a 20 to 25 point risk on this high of day breakout. And to say that it's not is just stupidity, because I'm playing the actual charts. I'm not just telling myself, well, I only want to risk 10 points on this trade. The market doesn't really care if you want to risk 100 points or you want to risk 5 points. The market doesn't give a shit. What does the technicals say? Now, you can find other areas to tighten up that stop loss, like maybe using a 9 EMA, maybe using a 1 minute candle previous low. But again, remember, the tighter your stop is, especially on a high volatility asset like the NASDAQ, the higher the probability you're probably going to get stopped out in consolidation. So what you're trying to do is find a sweet spot where you can get into a trade and actually let it breathe a little bit versus holding your breath every time you're getting into the trade because your stop loss is so tight. I always recommend to just kind of manage that breathability with the number of contracts you're trading. Now, clearly, if I jumped into this trade with 5 mini contracts, I'm going to be holding my breath every downtick, right? But if I jumped into this trade with 2 or 3 micros and I go down 10 points, I'm not really, losing sleep over that, right? And I'm allowing that trade to breathe to see if it's going to continue to run in that favor and in that manner, right? Full disclosure, I am in a long position here. My average is 21,395, so I took it on the pullback. 395 is, where the hell is 395? Right here in this area, on this breakthrough of this area off this red candle pullback here. So my entry is right here above these 2 red candles off the pullback, right? So we had 2 red candles. We had this, doji candle, green candle that pulled into the 20 SMA support. And as we start to break through this price action after holding this 20 SMA, I'm long here from 395s. So I don't really have a big target on it, maybe 10, 15 points. My stop loss might be, below 380. Which again, as we approach lunch, because we've been drifting higher, I would expect a pullback going into lunch here. So I'll be a little bit more cautious on this hold here. And again, for those of you guys who are new, I have a theory going into lunch and coming out of lunch. It's basically, look to the left of the chart. What was the chart doing going into lunch? Typically, you see consolidation and you see chop going the other way during lunch. If you don't, that's very rare, and it's telling you that the trend is very, very strong. But I could definitely see here within the next 10, 15, 20 minutes us pull back to 350s, us even pull back to 310s. Maybe us sweep the highs and then pull back. I can see that option as well. It's just the market's had a hell of a run here, coming from the lows. The low of day today, is sitting at 21,192. I mean, we're up over 200 points. So, looking at a pullback, I can definitely see that happen during lunch. A little profit taking, a little bit of an algo switch there, kind of running people's stop losses who have been sitting long. And if the market's going to continue to be strong, then you'll see that hold somewhere around one of these 2 levels that I have here, and then you'll see that continuation back up to the upside, which, as long as we're still holding a higher time frame long bias, will be a great opportunity to get back in long, right? And I feel like a lot of times people will allow these things to pull back and pull back even farther, and then they'll wait all the way until it takes out the high of day again. It's like, no, you think about it as buying a car. You don't just want to go in there and buy it for sticker. You want to haggle these guys, right? Like, I want a little bit of a rebate. I want a better price on the interest. I want to, you know, take a little bit off of the manufacturer sticker price. Like I want a little bit of a better deal here. I'm not just going to go in here and just believe everything you're telling me and just buy it at the highest price, right? That's not the smartest thing to do, you know, when you're shopping, right? So think about it in the same manner. You want a little bit of a better price. If you know you want to get long, well, you want the best prices possible. And typically the best prices possible comes with trying to have as minimal risk as possible on that trade. And a lot of times, if you're not really using like a higher time frame bias to stay in your trades, if you've ever noticed yourself getting into a particular trade and it's like, how come when I got into this trade, you know, it kind of stalls around my entry and then it's going the other way. If you're fighting a larger time frame trend movement, that's why the smaller time frames will look like it's doing something, right? But realistically, you're going against the current on a bigger incoming wave. So if you find yourself with that problem happening a lot, have you ever heard like where people say, okay, every time I feel like I'm going long, I should just go short. Every time I feel like I'm going short, I should just go long, right? Like just to inverse yourself. If you have that problem, I would definitely pair yourself with the higher time frame bias and kind of see if a lot of your ideas are going against I just got filled, guys, for 15 points there. A lot of your price action trades that you're taking are probably going against a higher time frame movement, because even on this trade that I was in, I've been in this trade, Jesus, for 5, 10, 15, 20 minutes for 15 points, right? Like that's not a lot, especially on the NASDAQ. To get 15 points to take 20 minutes is a lot. Like I've gotten 10, 15, 20 points in a minute, in 30 seconds before. But I'm trying to like ride with the higher time frame here. Higher time frames slowly grinding higher, you know, so whatever it is, what it is. But if you notice that that's happening a lot to you, maybe give yourself that higher time frame bias, pair it on your chart like how I have it here. I got, you know, multiple charts that I'm looking at different time frames, but I really like, for scalping, I like using the 15-minute bias to pair all my entries, and whether it's on the 1 minute or the 5 minute, because I know even for futures, there's a lot of times where it looks like let's say the market's going higher, it looks like a darn good short opportunity. I take it, and literally from the time I take it, it's bouncing against me 10, 15 points. I'm like, you know, how, right? Everything's aligning perfectly on this 5 minute, 1 minute chart I'm looking at. And then like when you really look at the 1 hour or the 30 minute or the 15 minute, it's like steamrolling the other way. So it's like, it makes sense, right? You'll have much better success probably just firing an opposite side position is what you think is happening on that 1 minute, 2 minute, 5 minute chart, because of the fact of that higher time frame movement. Now, again, keep in mind, there is going to be periods of time where the price action is moving in the opposite direction of that higher time frame bias because it's back testing that higher time frame bias. So there's going to be a period of time here, like let's say during lunch, this market starts to pull back, where it can fall all the way to 325 and still be bullish. So you might be able to make money from 400 to 325, but you better be quick with the trigger and taking those profits, or you're better off just sitting on your hands completely until you can get some alignment with both time frames. It depends on what time frame you're using to scalp. So if you're using the 1 minute time frame to scalp, I really wouldn't worry about the 1 hour, right? You're so far, that's so like, it's so, there's so much of a discrepancy there. The rule of thumb here is you want to be 3 to 4 time frames outside of your entry time frame. Does that make sense? So if I'm taking entries on the 5 minute, I want to be looking 3 to 4 times outside of that. So what would be double? The 10 minute, the 15 minute, the 20 minute. I want to be somewhere in between 10 and 15 minutes in sync. You know what I'm saying? Because typically a trend on a 15 minute is probably going to last 30 to 45 minutes to an hour. A trend that's starting on a 1 hour might be a 2 or 3 hour move. A trend on a 30 minute might be a 1.5, 2 hour move, right? A trend on a 1 minute might only last 5, 10, 15 minutes. A trend on a 5 minute might only last 30, 40, 50 minutes, right? So you want to be about 3 to 4 deviations outside of the entry time frame that you're at. So let's say you're trading the 1-2 minute. I mean, the 15 minute would probably be max. AJ, I'm not going to be really looking at the 30 minute and the 1 hour chart because you're on the 1 and 2 minute. I'm not expecting your trades to last an hour long. Like, I've asked a question before to people, like, have you guys ever looked at your stats? How long are you guys actually in these trades? Look at the average time and look at the longest time you've been in a trade. Like, I can guarantee you, if you were in a 1 minute time frame all the time, your average trade time is not an hour. I'll tell you that for a fact. So do we really want to look at the 1 hour time frame as our bias? Probably not, right? Because we'll probably be stopped out long before, right? So 10 minutes max. So you want to be somewhere in that fifth, like kind of where I'm at, that 15 minute time frame. If you're bullish on the 15 minute, you want to be keeping those long entries pretty bullish. So again, even when you feel like, let's say right now, I know you use fibs. So let's say right now you have a fib from high of day down to the low of day, and you're approaching a level of supply on your fib. Well, maybe you're not getting long off of that reclaim of the fib on the first break. Maybe you're letting it break, pull back a little bit on your 1 minute chart, and then finding that pullback entry on your 1 minute chart as long as your 15 minute chart is bullish, and then taking that confirmation, right? 20 play long on the 5 minute, or what time frame? Yeah. So this right here at 6:55 in the morning. So I'll draw a block here, right? Let's draw a block. Here is our 5 minute 20 SMA trade. Okay. That's happening right here just below that higher time frame bias confirmation. So in this particular trade, because it was going right into the daily 10 SMA supply, because it was going right into this swing high from pre-market right before we had that drop off the open, I am probably going to wait for that next swing high to get broken and then confirmed, whether it breaks it by a point or in this case breaks it by 35 points, or I'm going to wait for us to completely reclaim that 5 or that daily 10 SMA. Okay, because look at what happens on this candlestick right here. Next 15 minute candle starts to pop and is now changing from a short bias to a long bias. So on this particular situation, either I'm waiting for a break in confirmation over this pre-market high, or I'm waiting completely for this 5-minute candle to close. And then I'm taking this candle here at 7:05 Pacific, so 10:05, which is actually the trade that I took. So remember, like we had that conversation, B, we were kind of going over, maybe we don't trust this 30-minute opening range as much. I agree with that 100%. So instead of just having that wick us in 5-10 points, because I've seen that happen, and then pull all the way back because quote unquote the bias is still short on that higher time frame, we want to see that bias flip. And now as soon as that bias flips, we don't think to ourselves, oh well, the trade's gone. Because if that was the case, look at what happens here, B. It went from 342 and we're currently trading at 415. So it's up almost 100 points since confirming that new long-sided bias, right? So even when you feel like you're missing out on something, the thing is this, if it's confirming a new area of supply and the bias is flip-flopping, you gotta roll with it. So I could just use myself as the example here. I waited for the daily 10 SMA to get reclaimed. I waited for the sweep of this pre-market high, and I waited for a following candle to confirm the new high here. And then I went long. Because now I can tell myself, okay, I'm trading over the 20 SMA. Now again, you don't have to use a 20 SMA. It's just what I use, right? And I'm not going to change what I've been using for, I've used it. Like if many of you guys who have been trading with me for a while, you guys know that I have strategies built around the 20 SMA, a lot of strategies built around it, right? A lot of things I'm referencing back to the 20 SMA. So take this, for example. You guys have heard how people reference VWAP, right? If we're trading below VWAP, if we reclaim VWAP, if we bounce off VWAP, I use the 20 SMA as my VWAP. Let's just put it that way, right? So people who are using VWAP for bias, I use a 20 SMA for bias. I know people who use the 21 EMA. I know people who use the 9, the 8 EMA. I'm here to tell you, it doesn't matter which one you're using. Follow and execute your strategy around what it is that you're using in the markets, because not one is any better than itself. I just happen to use the 20 SMA. It's what makes sense to me. I've seen a lot of trades, and there's no reason. It'd be like me to say, well, maybe I should just use the VWAP. Why? The 20 SMA works fine for me. I don't need the VWAP. Maybe I should use a 21 EMA. I'm like, why? The 20 SMA works fine for me, right? So I'm just expressing and explaining things on how I do things. But again, if you guys find something else that you guys like and a little bit more comfortable with, feel free. But I've done a lot of back testing on the 20 SMA. It works. There was a point in time 5-6 years ago, I used to use the 9 EMA a lot. That's going to hold a lot tighter to the current price of the asset. But I do notice that the 9 EMA or anything sub 20 SMA, even the 5 SMA, those are more so for like super duper power trends. And if the market goes into a period of consolidation and you're kind of looking for entries around those moving averages that are going to hug a lot tighter to price, you can get chopped up in periods of consolidation. Versus for me using the 20, or people who use the VWAP or something bigger, maybe it's just telling us periods of just sit on your hands. We're not really doing anything around those times. But that's how I would play it. That's how I play it. Like I can just go around the room. How many of you guys, since let's say after the first hour of the market's been open, so right now we're going on almost 3 hours the market's been open. Since after the first hour, how many of you guys have really, really trusted longs? Like where you're like, okay, cool, I just need to be going long. Like how many of you guys have really trusted longs? Or how many of you guys have had the thought where maybe I should start looking short? Maybe I should go short. Like, I'm just curious on that thought process. Like, is everyone 100% on the longs right now? Like, have you just been trading longs the past 2-3 hours? Or are we looking for shorts? Dave took a couple longs. B Twins looking for some shorts after the run up. So let me ask you this. Let me ask you this question, B Twins. Why were you looking for shorts after the run up? Trend line break. What? You're looking maybe at something like this. What time was that at? 9:45. It was right here then. So you're looking for something like that. Is that what you're kind of looking at? Yeah. So let me ask you a follow-up question. On something like this, did you make money on it? Okay. So let me just give you my opinion. Is this a perfect setup to take? No. Is it a legitimate setup that you could have taken? Absolutely. Could you have made money on it? Absolutely. Could you have lost money on it? 1,000%. So on a trade like this is the only note that I'll leave all of you guys with. If you're going against the trend, not only against the trend on the entry time frame that you're trading, but going against the trend on your higher time frame bias, if you're going against the trend, and I take these trades all the time, you are looking to scalp very quickly, get in, get green. We are not going into this type of setup with the mindset of, well, if we break, we might be coming all the way back down here or even here or even here. We're not thinking that because we are shorting right into market, trying to establish where is our new support going to be off of this run up. Does that make sense? Versus if this was inversed like this, right? If it was inversed, I just inverse the chart here. So let me blow this up. Okay, look at this. Versus the trend here on this chart is down, right? So if I was taking this trend line break, let's say for example, now I'm going to hold that trade. Does that make sense? Because I'm going with the trend. So I'm not necessarily think, okay, I've got to get in, get green, and get the hell out. I can now look at this big drop, look at this consolidation, and say, if this trend line breaks, I'm going to get short, and I can actually hold it because I'm going with the trend. Versus, right, when you're playing the same move, when you're playing that same move that I just showed you guys on that inverse chart, when you're playing that same move against the trend, it's a legitimate setup. If you understand, I'm going to get into this trade, I'm going to look to take 5-10 points, I'm just going to get the hell out because I'm not going to allow them to trap me going against this trend on a higher time frame wave. Does that make sense? So again, and like I take these trades too a lot, but like how much would we have actually gotten here from 362 down to 349 very, very quickly? You know, we're looking at 10, 11 points. I mean, on something like this, I get in and it starts going and I'm up 5, 6, 7, 8 points. I'm trying to take my money fast. Like I'm just trying to get out very, very fast. Have no intentions of actually holding that at all. Even giving it enough space to try to run, just due to the fact that I'm going against a trend. Versus, like I showed you, if it was a trend line break with the trend, I want to hold it. So for example, something like this, look at this one right here, right? You put in a pop, you consolidate, 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 you pull back, and now you have a trend line break to the long side. Now this is something I want to hold. As long as we're holding this 20 SMA, I want to hold it. Here's another one right here with the trend, right? Here's a new high, pull back, pull back, pull back for 15 minutes, break of the new highs. This is staying with the trend. So if you have an idea to go short against the trend, as long as it makes sense and you can manage your risk, Just understand you want to take profits as quickly as possible on that versus when you're staying with the trend. I hope that makes sense. But again, if you just pair that same idea of wanting to go short with the higher time frame bias, well, if your higher time frame bias is long, we're not necessarily even looking for a trend line break short. We're looking for trend line breaks long. Because remember, the analogy with the buying the new car, we don't want to pay top dollar for our new car. We don't want to pay top dollar for our long. We want the best price. And where's that best price going to be? It's going to be off of a pullback. It's going to be off of some trend line break. It's going to be off of supply, the initial balance high. It's going to be off of, 30-minute high. It's going to be off of a daily moving average. It's going to be off of SMA or an EMA. We want the best price. So that's why again, I'm telling you, it's going to be very, very powerful for you guys to just pair up that higher time frame bias with the time frame that you guys are taking entries. Also, guys, I've kind of changed things around here in terms of the live streams. When you guys come into the room, again, I don't have my headphones on, but when you guys come into the room, unless you're muted, I think you guys will have a hot mic. So just keep that in mind. You guys can definitely talk if you want to, but if you don't, I don't know, sometimes people are doing other stuff. If you don't want a hot mic, just make sure to mute yourselves. But like, you guys can definitely talk. If anyone wants to speak, I should be able to see you guys when you guys are talking. I'm gonna post this as well because it's good to kind of study these continuation style traits, right? I'd like to be more so on the side where I'd like to be more so on the side where we're trying to identify the higher time frame bias and stick with getting a better price on that trend than to try to reverse that trend, right? The only way we can really reverse this uptrend that the market's doing here is technically it breaks the whole overall trend and starts to lose an area of demand. And to be honest, that's not really going to happen until, I mean, at least this structure of 350 gets taken out. At least 333 gets taken out. Or 311. That's it. Other than that, it's just kind of a sit and hold long here. It's kind of just a runaway train now at this point. $4.76 is our daily ATR. We're kind of at that upper extreme now, no? Wouldn't you guys say? I haven't measured how many points exactly, but we might be. Today's first day, we're kind of breaking 1, 2, 3 days worth of consolidation here from this low to this high. Kind of breaking this short-term consolidation here. Your next real resistance doesn't sit up until about 21,500 through 550. And then above that, yeah, 550, 560. If I'm gonna mark these out just to kind of keep a clear eye on it. You know, not saying that this is gonna happen today, but when and if we do get up here, I want to be mindful of that. That was that clear flat top double top that we put in going back about a week. 2, 3, 4, 5, 6. Yeah, going back, 7, 8 days, 6 to 7 days. All in all, good stand here for the Bulls. We're still in a much larger range here. 20,900s to 22,000s, an extremely big range here on the weekly fibs. But all in all here, so far, great hold down here at this 20,944. No real pullback since this bounce has started. And again, it feels like forever ago that we were actually just trading down and down and down every day. I mean, this bounce started all the way back here, the week of 420, right? So the week of 420, I mean, it's just been up and up and up and up and up. And now we're finally starting to get some distribution up here where we're stuck in this channel between 20,900 and 21,566. Now on this bounce, this weekly fib level that I have here, we've never really back tested the 200, the 50-day moving average yet. Even on this type of pattern, a pullback to 19,300 would not be out of the question, right? But if we continue to break highs and we take out 21,566, this could definitely come all the way back up here to 22,000. Again, it's been healthy price action here. The Bulls have really done a good job every time we're pulling back at bouncing. There will be a point in time, though, that you're going to see that we are no longer holding those bounces, which at that point in time you would want to see. If we do start getting some daily closures below 20,900s, I would then say it's safe to say we can kind of flip our macro bias short versus like right now we're kind of looking for a lot more longs. At least I feel that way. Again, if the last month you haven't felt like you've been looking for a little bit more longs, I think you've been on the wrong side a little bit more. But